As the economy keeps getting worse, the younger generation has started getting a little cautious with what they do with their money. It's really getting them to question, checking account, is it a must? But before we begin, be sure to like this video and subscribe to the channel so you don't miss out on any of our future videos. Number 4. The convenience. A checking account varies from other bank accounts in that it often permits unrestricted withdrawals and deposits, while savings accounts may sometimes place restrictions on both. Anyone who often wishes to make withdrawals or transactions from a bank account can benefit from having a checking account. A checking account can usually be opened relatively quickly and easily. You may apply online or in person at a bank office. Checking accounts may be used for joint accounts, student accounts, commercial or corporate accounts, and many more account types that provide comparable benefits. Businesses utilize and own commercial checking accounts as part of their operations. Officers and managers of the business may sign on the account as permitted by the governing papers of the business. Some banks provide college students with a unique free checking account that is free till they graduate. A joint checking account is one that allows at least 2 users, often spouses, to make checks on the account. Checking accounts normally do not provide significant interest rates in return for liquidity, if they offer interest at all. However, the Federal Deposit Insurance Corp. (FDIC) will protect your money up to $250,000 per individual depositor per insured bank, provided it is kept in a licensed banking institution. Number 3. What effect does it have on your credit score? Banks often offer a service to sweep the checking account for accounts with high balances. Banks often offer a service to sweep the checking account for accounts with high balances. This entails taking out the majority of the account's extra money and putting it in overnight interest-bearing funds. The money is returned to the checking account together with the interest accrued overnight at the start of the following business day. However, the majority of routine checking account operations, such as making deposits and withdrawals and writing checks, have no effect on your credit score or credit report. Canceling inactive checking accounts that are in good standing likewise has no effect on your credit score or credit record, unlike closing credit cards. As long as you take care of mistakes that lead to checking accounts becoming overdrawn, they do not show up on your credit report. Before offering you a checking account, some banks do a soft inquiry, also known as a pull, on your credit report to see whether you have a good history of managing money. Your credit score will not be impacted by soft pulls. The bank will probably do a hard inquiry to inspect your credit record and credit score if you're establishing a checking account and applying for additional financial goods, such as credit cards and house loans. Hard pulls may lower your credit score by up to 5 points and stay on your credit record for up to a year. Number 2. What other kinds of checking accounts are there? Since overdraft protection is a line of credit, the bank will probably pull your credit if you apply for checking account overdraft protection. After an overdraft, the occurrence will likely be reported to the credit bureaus if you don't quickly return your account to a positive level. The bank may turn your account over to a collection agency if you don't have overdraft protection. Overdraw your checking account and fail to quickly bring it back to a positive level. In such an instance, the credit bureaus will also get notification of that information. Regular, basic checking accounts, premium checking accounts, student checking accounts, senior checking accounts, interest-bearing accounts, business checking accounts, and rewards checking accounts are a few of the several kinds of checking accounts. Each of them has unique features or restrictions on certain aspects, such as minimum deposit amounts, transaction fees per month, ATM fees, and overdraft insurance. Don't forget to subscribe to our channel and hit the bell so you don't miss out on future videos. If you enjoyed the content, then do leave a like. Number 1. What distinguishes a savings account from a checking account? An account with a financial institution called a checking permits both deposits and withdrawals. Checking accounts, also known as demand accounts or transactional accounts, are relatively liquid and may be accessed in a variety of ways, including via checks, automated teller machines (ATMs), and electronic debits. A checking account is designed for usage with everyday cash requirements. It serves as a person's main source of funding and allows for the withdrawal of cash for use in paying bills or making purchases. An account designated for saving rather than spending is called a savings account. In contrast to checking accounts, savings accounts allow you to receive interest on the money you put into the account. A checking account allows for unlimited withdrawals, but the majority of savings accounts have monthly withdrawal limits. A checking account with a bank or other financial institution is a highly liquid form of transaction account that enables the account user to make deposits and withdrawals. Checking accounts, as opposed to less liquid savings or investment accounts, are intended to be used daily and permit many deposits and withdrawals. Increased liquidity comes at the cost of checking accounts holders receiving little or no interest or other perks. You may use direct deposit, an electronic transfer, or an ATM to put money into your checking account. You may withdraw money from your accounts via banks and ATMs, checks, or electronic debit or credit cards linked to your accounts. Checking account fees, which are imposed for overdrafts, should be kept in mind. Additionally, some banks demand that you maintain an account balance at a certain level. Choosing one of the more prevalent no-fee checking accounts might help you lower the expense of regular banking. With that, we come to the end of the video, so until next time, take care and goodbye.